Hi everyone, your Tampa real estate expert Lance Moore, and in this video I want to go over what I call the home refinance myth. And if you don't really understand the ins and outs of refinancing a home, there's a great possibility you're not only going to lose thousands, but tens of thousands of dollars over the years. So what is the refinance myth? Well, it's basically a lot of times people are refinancing because they think they're going to be saving a lot more money than they really are, and they're really not. And that's in the long term, that's going to end up costing them thousands, and in actually most cases, tens of thousands of dollars. So let me explain. Let's start off, and I'm going to give you some statistics so you have a good idea. Right now, the average person lives in their home 8.1 years. And the average person, homeowner, will refinance every 5.1 years. So the average person is refinancing at least one time when they live in their home. Now here's the problem. Here's what most people do. They may live in the home, get a 30-year mortgage. They live in the home for 5 years. All of a sudden they refinance. Well, what do? They go back to a 30-year mortgage again. They get another home. They live in it for several years. They refinance. They go back to a 30-year mortgage. So at the end of the day, they're in their 50s, 60s, 70s, whatever, and they have no equity in their home. And this is happening to millions and millions of Americans. And this is why I really felt it important to do this video, to help people really understand how the refinance works and what you need to do. Because I think what people want to do is they want to have a nest egg. They want to use their home as their nest egg as a retirement vehicle. So here's what I tell people, and what I'm going to do is I'm going to give you a real example of what happened to me when I used to be in mortgage lending. Now a lot of you know that my past life I was an engineer, then a mortgage lender, and so I'm a numbers person. So basically, I had a couple come to me years ago when I was in lending, and she called me up and she said, well, the interest rates have dropped 1.5%. They want to refinance. So I asked her what her mortgage amount was, how long has she lived in the home, and what her current interest rate was. Because certainly the higher mortgage you have and the larger interest rate spread, the more beneficial it'll be. So what happened is she said, well, I don't know what it was. I mean, what her interest rate was, but let's just say back then it was, 7.5%, and the rates dropped to 6%. She had maybe, I'm just throwing numbers out there on this, she had, say, $200,000 that she owed on her mortgage, and she's been living in the home 8 years. And I said, okay, well, why do you want to refinance? And she said, well, because I could save $160 a month. And I said, well, yes and no. I said, let me ask you a question. How long are you going to live in your home? And she said, well, I don't know. I said, well, in order to refinance, you need to know how long you're going to live in your home for. I said, because it's a matter of how much you're saving every month, so you know where your threshold is. And so she said, well, they're probably estimating anywhere from about 4 to 5 years. And I said, okay. I said, well, have you talked to any other lenders? And she said, yes, she did. Well, what most lenders do, and I think a lot of them just don't really understand how to do this, but what most lenders do is they'll get someone who calls up, and then they'll tell them what the interest rate is, and then they'll put him back on a 30-year mortgage. And I know, because one of my rental properties, every other month they want me to refinance for zero cost. But what they want me to do is they just want me to be like a gerbil on a treadmill over and over and over and over again, chasing the dollar. They're going to reset me and reset me and reset me back to 30 years. And I told her, what you need to do is you need to first figure out, and you don't amortize it over a 30-year mortgage. You need to amortize it over 22 years because you've lived in the home 8 years. I said, if you amortize it over 30 years, what are you going to do with those 8 years of mortgage payment, those part payments, those 80-something thousand dollars that you put into your mortgage, that you paid the bank? Are you just going to throw all that away and not do anything with it? And she said, well, I never thought of that. And I said, well, what we need to do is we need to figure out what your savings is based off of re-amortizing you over 22 years. That way, you're going to have it paid off in 22 years, not 30 years. Does that make sense? And she said, yes. I said, okay, now what we have to do is we have to figure out what your cost is on a refinance. I said, okay, when it comes to closing costs, there's two types of closing costs. There's what's called, number one, is there's what's called revolving or reoccurring. Now, reoccurring is stuff that's generally in your escrow accounts, stuff like your property taxes, your hazard insurance, etc. It's sitting in an account. You'll pay it up front when you do a refinance, but you're going to end up getting it back. So it's really not a hard cost. I said your other one is what's called your non-reoccurring closing costs. Non-reoccurring closing costs is what is really costing you to refinance. So it's going to be maybe stuff like loan origination fee, document preparation fee, appraisal fee, underwriting fee, credit report fee. If you don't have a survey fee. I said, so then what you want to do is you want to take all those costs, not the revolving. You don't want to deal with that. You want to take the cost that is actually costing you to do the refinance. So you take those costs. Let's say they're $4,000. Okay, so they're $4,000, and let's say you're saving $100 a month. I don't know what it is, but let's say you're saving $100 a month. Well, what you do is you divide that 100 into the 4,000, and you have to be in your home at least 40 months in order to break even. I said, so if you're going to be in your home under 40 months, it's not going to behoove you to refinance. If you're going to be in your home over 40 months, it's going to be a good idea to refinance. Now, I don't really remember what all the numbers were, but it wasn't worth it for her to refinance. So she didn't refinance. Now, I know when I was in lending, I don't want to say I lost a lot of business telling people this. I just couldn't get people into my office and take their money knowing darn well they shouldn't be doing this. Now, I'm not saying lenders who do this are predatory and they're trying to just take your money. But it's either that or they don't know. And that's really unfortunate, because what tends to happen with most people is they see what their interest rate is, they see a lower interest rate, or for whatever reason, it doesn't make any difference. Even if they need a cash out refinance, don't go back to the 30-year mortgage. Don't do that. Figure out how long you've lived in the home. I remember years ago, I ended up buying a home. Interest rates dropped quite a bit. I only lived in the home three and a half years. So what I did is I re-amortized my mortgage over 26 years. So I think it might have been on a 15, but I amortized it over 12 years. So I didn't want to go back and throw all that money out. So I think this is really important. If you have any questions, just make sure you talk to a good lender, someone who you could trust, someone who really understands this. And when you talk to them, if they're just automatically not asking you, how long you've lived in the home, and they're just throwing you on a 30-year mortgage, you might want to pick up the phone and try calling another lender, someone who really understands how this works. So I really hope this helps. Do me a favor, if you like this, give me a thumbs up, leave me a comment. If you have any questions about Tampa real estate, please don't hesitate to give me a call. I'd love to help you, and I wish you the best of luck, and I hope you have a great day.